Hi everyone. Representing ISEC, a warm welcome to each one of you to the Jyothy Labs results conference call. Representing the company today, we have Ms. Jyothy, Managing Director, and Mr. Sanjay Agarwal, Chief Financial Officer. At ISEC, we have had long-standing coverage of Jyothy Labs stock, and we continue to have a constructive view. Now over to Sanjay for the opening remarks, sir.
Thank you, Manoj, and good afternoon, everyone, and welcome to the conference call of Jyothy Labs. We'll be discussing the performance of the company for this quarter, which is March quarter, and for the full year ended March 31st, 2022 with all of you, and we'll follow it by the Q&A. So this year we had a strong start with, I think, all the last 4 quarters reporting double-digit growth, and we have closed the full financial year at 15.1% top-line growth. In fact, this is the first time as net sales value we have crossed 2,000 crores top-line sales, and it's at 2196 crores. So very happy to report this milestone in the life of Jyothy Labs. This has been achieved on back of our growing market share across all categories. And if you look at a 2-year CAGR, we are at 13.3%. So as we move along, our journey is to build further scale from here on, strengthen our distribution model, and gain market share. Our business, as we speak, is getting much stronger with the direct reach of 1 million outlets, and it's growing further. So that's a very important development, and which is helping us in building a business much stronger. There's been a significant scale up on technology side in distribution, in manufacturing operation. This year, as you know, you may be watching few of our TV commercials. We've added few more celebrities on board to endorse our brands. We launched new products in certain adjacencies like liquid detergent in Ujala and Henkomatic both. So overall, our target is to maintain a healthy balance between higher volume growth, our aspirational market share, and margins. And I understand, margins is something where everybody will get their ears alerted. We all know the input prices are rising, and it's a matter of concern for us, for the industry, for the consumer. Nobody is happy. Neither a producer is happy, neither a consumer is happy with higher prices, but that's the reality of life. So we have taken price increases, we have done grammage reductions, we have done as much as cost rationalization measures we can take, and we continue to track the rising input prices. So, but in spite of all these challenges, we have been able to do this growth. And the key impact of higher input prices obviously leads into increase in retail prices of our products, which impacts the consumer purchasing power. So, as we all say that the inflation is good, but such high inflation impacts negatively the consumer demand also. However, when we look at our portfolio, to some extent we are insulated because our product portfolio is more essential products, which is the day-to-day household consumption. Hence, to some extent, we are insulated, and we are witnessing stable consumer demand across our portfolio on a pan-India basis. If we look at the consumer sentiments, they are mixed, because the economy has been normalized post the last 2 years of pandemic which we had seen. However, one can feel the higher inflation which is impacting the monthly household budgets of the consumer. If we look at the urban and the rural side, both are doing well. There is a marginal decline in the rural growth, what we had seen in the past. But as Jyothy Labs, 40% of our sales come from rural, and we will continue to focus on rural growth. We have been adding rural stockists, very unique methods to reach out to the rural India through the help of van operations, mopeds, adding more sales team on the ground, which is giving us a lot of competitive advantage as we move along. So overall, we see immense potential for our products, and we'll be focusing on increasing the distribution, increasing the brand investments. In spite of being a challenging year, we have been able to increase our media spends by 30% on a year-on-year basis. So we'll continue to do that. We want to reach out to a larger consumer base, gain market share, and also strengthen our position in states or geographies where we have a lot of potential to gain further market share. On the input prices, I'll just spend another minute on that. We do believe that raw material prices are at a peak. It's a matter of anybody's judgment how the raw material prices will behave from here on. So if the prices cool off, else we'll have to take further price increases from here on. I'll share some more facts. As Jyothy, we have taken, the input prices which have been rising have impacted our overall products by 14%. Now, we have taken price increases over the last 1 year to the tune of 6 to 7%, and the balance has impacted our margins, which is what you see, a 5-6% decline in our GMs, and which has been flown down to our EBITDA margins. So as we move along, we are clear we will consider further price increases if the higher input prices persist. We'll further focus on product mix and SKU rationalization, which can offset some more material pressure, cost pressure, which we may see in the future. So overall, we are optimistic on the future outlook, which is backed by the work which we are doing to build our organization more agile, more resilient, and a market-focused organization. And we are seeing the results in the last 1 year, in the last 2 years. So the last 7 quarters have been on double-digit growth. So we are happy with that performance. Moving on to the category-wise performance. As you all know, we are broadly into 4 categories: fabric care, dishwash, personal care, and HI. Fabric care and dishwash are each a third of our business, and personal care and HI contribute to the another third of our business. So fabric care is doing well. This quarter we grew by 18%, and for the full year we have grown by 22%. The unique thing in fabric care, what we are witnessing is large packs across all channels are doing well, especially in the e-com and modern trade. Our e-com business per se has been growing by good 30-35% every year. So, and also with the opening up of the institutions and workplaces, the past challenges where we had on the post-wash products, which is Ujala Supreme and Crisp and Shine, they have also come back broadly to the pre-COVID levels. And I'll just call out the brands like Ujala IDD, where our market share in Kerala has now increased to 21.9%. So overall, fabric care category continues to do quite good. In terms of the dishwash category, we have 2 of our power brands, Exo and Pril. Both continue to do well, double-digit growth, what you've seen in this quarter, and for the full year as well. Now, the growth in dishwash, as you all know, for the last 2 years has been a lot of focus or emphasis on hygiene by the consumers, and we have taken very strong distribution drives across all channels for dishwash because we are seeing a decent growth, and the products have been liked by the consumer. In Exo, if we specifically talk, we are seeing a double-digit growth more on the back of the LUPs, which is helping us to recruit new consumers. So that's where a lot of growth has come in. And if we look at both Exo and Pril, we have been able to establish them as a clear brand of choice among consumers. So dishwash continues to do well. Also happy to inform that Exo Bar in this financial year has crossed net sales value of 500 crores. This is only the Exo Bar. Exo as a category was obviously is much higher. In the third category, HI, we have witnessed extreme weather conditions, and as we speak also this quarter, the weather conditions have been very, very extreme. So this has impacted the key season for HI, which is this March-April period, and we are strong in North and East where we have seen a much higher impact. So this quarter we had a negative growth in coils. As an HI as a category, but negative growth in coils, while liquid vaporizer continues to do well. There is a decline, but if we look at it even on a 2-year basis, we have grown by 11%. So that's a category which needs to be washed out. On the last category, personal care, which is a Margo franchise, a lot of ground activities are underway to celebrate 100 years of Margo, which basically advocates the natural benefits of neem. It's been doing well. For this quarter, we have grown by 11.7% in spite of taking frequent price increases. So these are about the last 4 categories in which we operate. I'll sum up our discussion and the way forward for us. We will continue to focus on volume-led growth. We know margin challenges will be there. In spite of that, we would like to focus on higher brand building activities, invest in technology, make a distribution or direct distribution much stronger. We'll continue to add manpower on the ground to further strengthen our rural expansion. Now, we know that we will be facing inflationary input prices, which may impact the demand. But as we speak, the expectations of good monsoon are there. Government has been spending a lot of money on government welfare measures, and therefore we believe that rural offtake should pick up, which will give the overall growth momentum for our business. So in net, the last 7 quarters, the confidence what we have, our focus on execution, we believe that the next year, which is ahead of us, FY22-23, we should deliver on the same growth trajectory of double digit. With that, I'll finish my opening remarks. We are happy to answer any questions and clarifications you may have. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aniket Sethi from ICICI Securities. Please go ahead.
Hi, sir. Thanks for the opportunity. So Sanjay, I guess the number which you said in terms of input inflation, which was 14% versus a price increase of 6 to 7%, I assume these numbers would be factoring in the inflation till fourth quarter. And 1Q has kind of seen incremental inflation for most of the commodities. So if you could help with the direction on let's say the price increases you have planned in the first quarter, and vis-a-vis how much is the inflation you are seeing in the current quarter?
Yeah. So see, as we speak, last 1.5 months, we talk about April and May, things haven't cooled off. Things haven't gone really bad from there on, barring, some of the products like soda ash and all the prices have gone up sharply. So if I look at it on an overall portfolio basis, we have whatever price increases incrementally what we have seen on the input prices. We have taken some minor price increases in the last 1 month also, and we will have to continuously track that and keep passing it on as much as we can in line with the competition actions. So as we speak, this is where we stand, and we'll have to keep speaking to all you guys as if the prices increase here on.
How much is the increase you have taken in this quarter? Price increase?
It's a marginal number as of now, on the whole portfolio, because see, if you look at it, we've already taken 4 to 5 price increases in the last one financial year. And, for a consumer to keep seeing that price of the product keeps going up, the speed with which now we can take price increases will always come down unless the price increases or the input price increases are to a very large extent. So going forward, we will increase the prices, but as of now in April, May, we have been just on a wait and watch.
Okay, and on the grammage reduction, basically how much has that helped us, and do you think if that lever still exists for a next 6 months perspective?
See, grammage reduction is only to the extent of those 5 rupee, 10 rupee packs, which is, hardly you can do, because that's the last lever what one uses. So, LUPs account for, say, 30-35% of our total portfolio. And, price increase is a key lever for us than the grammages.
Understood. And on the EXO side, dishwashing, while you're getting a lot of conversions in that brand, but if I recollect, you had also launched a liquid under EXO some time back to drive upgrades. So how is that performing, or that's not a focus currently?
So yes, we had launched EXO Gel in the South markets. Again, it's a launch and it's pretty much in the initial stages. The pouches are doing fairly well. While we are still tracking, our main liquid is, the focus on liquid is in the under Prill.
Understood. And the 3-liter pack in Prill, that would be a modern trade offering, right?
Yes.
Okay. And lastly, the volume growth number, is it like the revenue growth minus the 7% price increase? That's the volume growth number for the quarter?
Yeah, I'll just clarify. For the quarter, the volume growth is 3.6. And the balance is obviously, as you said, 7% is the price. And for the full year, the volume growth is 9% and the overall growth is 15.5.
Understood. Thank you, sir. I'll come back in the queue. Thank you.
Sure, sir.
Thank you. The next question is from the line of Abhijit Kundu from Antique Stock Broking. Please go ahead.
Yeah, thanks for the opportunity. So my first question was on in fabric wash.
Kundu, we are not able to hear you clearly.
Yeah. Can you hear me now?
Can you use the handset mode while speaking and not speaker?
Sure.
Thank you.
No, I'm not. Yeah. So in fabric wash for the year, you have recorded about 22% growth. So how much of this is volume? How much of this is price hike? Because just wanted to take a understanding of how much of it will be spillover impact of the next year. So there have been price hikes, but we believe that a good amount of those price hikes came in the second half. So just wanted an understanding on that firstly.
Yeah, so Abhijit, broadly 6 to 7% will be volume growth, and 6 to 7% will be the price hikes, and the balance will be the volume growth.
In fabric washing, okay.
Yeah.
And in terms of my other two questions are primarily we saw that in terms of other expenditure as well on an absolute basis. When I look at the absolute figure as well as growth, it was very well controlled in the previous years. But this year we saw some good amount of growth there. So what has gone into it? I mean, what have been the key reasons for the for the increase in other expenditure?
Yeah. So that's in line with the top line growth. There are in other expenses, there are certain expenses which are variable in nature, like you have the freight and the CFA charges. So which goes in percentage increase, like if the top line has grown by 15%, those expenses also go in the similar order. So, but they are very much in control. I mean, there is nothing which is an extraordinary out there.
So, are we doing anything to, do some cost rationalization, or is it already there? I mean, next year, in the next 2 years, are we going to see some amount of cost rationalization measures which will have a benefit on the other expenditure part?
Definitely. See, there is never a no to these type of exercises. The deeper the problem we all face, better creative, thinking goes around. So yes, we are continuously evaluating that. There will be some element of depot rationalization, how the servicing of goods can happen directly to large distributors instead of going through the depots. So bunch of things to save even small amount of money will always be on the track.
Okay. And you said that ad spends you have increased quite a bit, went up by 30% during the year, and you said that going ahead as well you will continue to spend. But would the incremental ad spend be on the same lines? I mean, in a year where you are seeing quite a bit of volatility in raw material prices on the with the upward bias, would there be some amount of control when we look at it on a year-on-year basis in terms of ad spends?
Yeah, so see, if you see this quarter, we had broadly kept it on a flattish mode. So as we move along, it will all depend on how we are looking at the input prices, and we will take a call as much as what is required. As I said earlier also, we'll have to take a call between our top line growth, margins and the market share. So we'll not sacrifice one for the other. But yeah, media spends, as we speak, we are optimistic, and we think that the raw material prices and all should on a yearly basis, if they normalize, then we will continue to spend what our current budgets are.
Okay. My last question, sorry for that, if I could squeeze it. On a year-on-year basis, when we look at the gross margins during FY23, so you have taken price hikes in the later part of the year and multiple times, the benefit of which should be seen on the gross margins. Year-on-year, still there would be pressure on gross margins, but at least in Q1 and Q2 you would be relatively better off. So when we look at the overall scenario, ideally there should be some amount of support on the gross margin part. I mean, gross margins ideally should not deteriorate from here, should see some amount of marginal upside, right? I mean, if even if it, assuming that raw material prices remain at similar levels as of now, the way they are.
No, so you are right. Definitely that should help us. But just for sake of clarity, 2/3 of our portfolio is detergents and dishwash, where key raw material is lapsa and soda ash. And as our presentation also gives the numbers, and you also would be tracking, these input prices have gone up very sharply. So as what you said, yes, it should support, but we should see some moderation in the prices of these key raw materials, which is 2/3 of our product portfolio.
Okay, got it. That's it from my side.
Thanks.
Thank you. The next question is on the line of Kaustubh Pawaskar from Sharekhan by BNP Paribas. Please go ahead.
Yeah, good evening, sir. Thanks for giving the opportunity, and congrats for a good set of numbers in tough time. So my question is on the direct reach. So in the initial comment you mentioned that now we have almost reached to 1 million outlets. So what is your target for FY23 and FY24?
We have reached the first time 1 million, outlets directly, and target we have set ourselves there are benchmarks, industry benchmarks that are there, and that's what we are aiming at in the next 2-3 years' time. That's where I would want to.
Okay. My second question is on the fabric care category. So if I further, get into the category, for this quarter, detergents, for the full year, the growth in detergents would be higher than what it was in the post-wash category, because price increases would be higher in this category compared to what it was in post. Because post-wash, even the category was on the recovery mode, so price increases would not be that significant in that category compared to what it would be in detergent.
Yes, broadly, yes.
Okay. And in terms of margins, if raw material prices stabilizes over the period of time, so should we expect operating margins to come back to around 15%, or will it take time, to reach to that level?
So it will definitely take some time. While we all think, yes, it should happen soon, but we can't give a timeline to this whole when it will come back, or when the food prices will cool off and we'll be back to the normal scenario.
Okay. Thank you. Thanks.
Thank you. The next question is on the line of Aviral Jain from Sigler Gulf. Go ahead.
Thank you. Sanjay, Jyothy, if you could just tell us.
There's a lot of disturbance from your line.
Okay, just a minute. Is it better now?
No, sir. The disturbance is still there.
I'm very sorry about apologies.
Why don't you start? We'll try.
Is it better now? Hello?
Yeah, we can hear you.
Yeah. If you can help us understand some of the initiatives you were working on in terms of expanding IDD to the rest of the markets, and also there was some initiative around taking Ujala Crisp&Shine to other markets. How is that planning out? Is it as per your expectations, behind plan, ahead of plan?
Yeah, so IDD for us in Kerala, where it was strong, it continues to be stronger, and we have gained market share. And we have extended it to Tamil Nadu and very recently also in West Bengal market. These are the 3 markets that you would find IDD. While Tamil Nadu is responding well, West Bengal it's very initial stages, because it's just about 2 or 3 months that we have kind of launched it. We are seeing, since Ujala is a very good or a recognized name in that market, we have good market shares on Ujala Supreme as well, which is the post-wash. We are hoping that we would get a similar sort of welcome that the consumers would give for the brand there. And speaking about Crisp&Shine, yes, we have extended to AP and Telangana as well, and we are again doing fairly well, especially after the pandemic, which had hit these categories hard, since the opening up and people have started moving, and the schools and offices have started. We are seeing good sales happening in that segment as well.
And my next question was on pricing. As in, you would have some benchmark brands for each of the SKUs, or each of the internal brands. Prill would be benchmarks in something of competition. Same would be for Encomatic, for Ujala IDD. So how do you see, as in from a pricing benchmarking perspective, each of these brands? Are they still in line with competition, or they are underpriced now, given we've not taken price hikes so aggressively, and which is what has led to gross margin pressure? So just wanted to understand where do we stand on each of these brands versus competition now, or whatever is the benchmark for that company internally looks at?
Yeah. So for crisp and shine, there is no benchmark because it's a completely new category, and we are the category driver in that segment. While speaking on detergents, yes, we do have benchmarks. Just for example, for IDD, though I don't want to take the benchmark competition name, but we are premium to the benchmark there in that state of Kerala. While rest of the places, we are priced at par with competition.
Again, just to belabor on that point, has it changed significantly in the last 1 or 2 years, the last 3 quarters, given so much of raw material price inflation has happened, which has led to so many price hikes? So, are we moving in lockstep with competition, lower, higher?
We are at par with competition.
Okay. Thank you.
Yeah.
Yes, that's from my side. Thanks.
Thank you.
Thank you. The next question is from the line of Sameer Gupta from IIFL. Please go ahead.
Hi, everyone, and thank you for taking my question. Sir, just wanted to understand the margin point. So we are seeing a 14% cost inflation you mentioned and a price hike of 7% taken. So what is the plan here? Let's say prices don't cool off, let's say in the next 6 months. So do we gradually take price hikes of the remaining 7%? It depends on competition, or are we okay to keep margins at like 10-11% in the near term? Or are we going to explore, cutting down ad spends? What exactly is the plan here? Just wanted to understand that.
So definitely we want to come back to the same trajectory what we had earlier on the margins. It will be a matter of time that we will be able to bring. So there will be 2 things which will happen. Either the prices will cool off, or we will have to take that much of price increases to come back to the earlier margin. Also, there is an impact of the mix. We will, may take all measures, whatever it takes, to get back to the earlier margin, but it may take some time depending on how the overall environment behaves.
And when we say take some time, is there a timeline to this, like 6 months, 9 months, or like, because the raw material prices are not in our hands, right? So just a scenario where, let's say, it is where it is right now. So how much, any sense on the timeline?
So the timeline is, if we have already taken 4-5 price increases. Now, it is easier to say that we'll take another 2 to 3 price increases, which will add up to another 5-7%. So we will have to do multiple things, which could mean moderating our ad spend. If that is what is needed, it may mean that taking some price increases, and hopefully, some prices may cool off by then. So bunch of activities maybe should happen in next 2 to 3 quarters as we speak, and we should be back to the earlier margin range.
Great, sir. And just another question, if I may squeeze in. Any comments on the demand scenario? So we know that there is pressure on the demand, but on the other side, there is also agri inflation, and any green shoots we are seeing on that regard.
So demand for us has been fairly okay. Yes, there are some, I would say, some softening a bit in that, in that aspect. But broadly, if you see, our LUPs have been doing well. There are certain SKUs which have been doing well. So if we see those things, those SKUs doing well and all that, the demand still for us that way, seems fine.
All right, that's all from me. Thanks and all.
Also, just to mention, while we have not spoken on these brands, which we used to put it in, we used to highlight more of the other detergent brands. There are certain brands which we have which were at regional levels, but which operates at the mass and the mid-price level. Those brands have been doing well, and we are seeing a lot of demand in those segments, and we have been registering good growth there as well. So when I say demand, we have seen that across happening on LUPs and mass, the brands that are at that mass segment levels. Yeah.
Great, Jyothy, and thanks for taking these questions. That's all from me for this time. Thanks.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Selvam Muthukumar, an individual investor. Please go ahead.
Good evening, Jyothy team. My first question regarding Maya Agarbatti. What kind of strategy to improve the market share? Because our competitors are old age famous brand. So what kind of strategy you are planning to improve? Can you share some details?
See, Maya is not a focus brand for us. Yes, it's selling well, and we will be selling in those markets where there is good acceptance. Our main focus brands, sir, are more in the dishwash, fabric care, HI, and the personal care segments. Not very much on Maya.
Okay. So the second question regarding Jyothy Fabric Care, presently available 6 cities. Do you have any plan to introduce a Tier 2 cities like Coimbatore or Mysore or Madurai like that?
No, sir. As of now, we are not expanding. We are there in wherever whichever cities we are there. We are just continuing to operate there.
Okay. Thank you. Thanks a lot.
Thank you. The next question is from the line of Senthil Manikandan from iThought Financial. Please go ahead.
Hello. Hi. Thanks for the opportunity. So my question is more on the broader strategic in nature. So over the next 3 to 5 years, across categories, so where do you see bulk of the growth coming from, or how do you see the company moving ahead? Like you can give a broader 3 to 5 years range.
So we'll be operating in the current segments. We don't have any plans to enter into any food segment or anything like that. We'll be operating in the current segment, which is the fabric care, the personal care, and the dishwash segments. Our concentration, our focus would be rather to expand these brands into much more geography. We have a lot of ground to cover in that sense. We have first time touched 1 million outlets, and there's a lot of scope to grow if we benchmark the competition and the rest of the place where the industry is, and that will be our focus. We have plenty of room to grow in all of these brands for the next 3 to 5 years.
Great. Just one more add-on question. On the capital allocation front, so if you can give an overview, because in the last 2 years, we have strengthened the balance sheet. Now we are net debt free. So going ahead, if you could some overview on the capital allocation point of view.
Yes, sir. I think we will be looking at any opportunities which come through our way on the M&A side of it in the categories in which we are present. So I think that will be a first priority. And we'll see when we can find a nice one to add to our existing portfolio.
Mr. Manikandan, are you done with your question?
Yes, thanks.
Thank you. The next question is on the line of Patanjali Srinivasan from Mirabilis. Please go ahead.
Yeah. Hi, sir. Am I audible?
Yes, sir. We can hear you.
Yeah. Sir, I believe that you mentioned that the higher value packs are selling more, which means the customer is more value conscious. But also for us, I think the margins will go down if we sell more of it. Can we come up with a bridge pack kind of a format? Is that something we've been considering?
Yeah, we are working on it. While, seeing the current situation, that is the inflation and all that, consumers tend to pick up those packs which makes, much more sense to them. And we are happy that these packs are, growing. It blocks the consumers for the next 3 to 4 months time, which is actually good. They get to experience our brand. While But having said that, we are also working on few other, initiatives.
And what is the cost of freight for us as a percentage of revenue in the current year?
It will be in the range of around 3 to 4%.
3 to 4%, as in freight and handling together?
No, not only handling, it's right from the factories to depots to the distributor, the primary and the secondary.
Okay, yeah, thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. The next question is from the line of Karan Bhavania from ICICI Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. Just wanted to ask, I saw in the presentation that you have lost market share on Prill. Even though we are performing very well on dishwash, we are still losing market share there. Can you just help us to whom we are losing the market share and what are we doing to protect our market share?
Yeah, we have gained market share in EXO, so it's not that across in dishwash we have lost. We have gained on EXO. Yes, Prill, there is a small loss there, but while internal sales have been growing in double digits, so really difficult to say why is it reflecting that way there. Our internal sales have registered double-digit growth.
Okay, thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
Thank you very much. It's been nice to hear all your views on our results, and we will continue to engage with all of you. If there are any further questions, please reach out to us, and look forward to interacting in future again with all of you. Thank you very much.
Thank you. Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.